Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Thursday. The CPI numbers are out, and they were actually better than expected, which did kind of give the market a little bit of a bounce and kept it a little bit steady, which is a good thing. So let's get into the slides. Um, basically what's going on here is that the consumer price index did fall a little bit, which is good. It was within expectations, which actually is pretty good. And it was lower than November, just barely, though. But that's a good thing. It seems like, at least for right now, and who knows? I mean, they may revise this, but who knows? It seems like inflation, at least, may be moderating. Now, it's not low. I mean, we have over 6% on inflation, but at least it's still not going up. So that indeed is a good thing. And hopefully that will be something that 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 continues here. I'm hoping because that would be indeed a very very good thing. I do have a stock of the day here. This one did come up. Let's kind of flip on over here. It's PODD. Oops, there we go. See if we can come back there. There we go. If I move it right over there. This one is it's an interesting stock. It's an insulin pump maker. Not I don't know much about this industry, but it is set up very very nicely, and it does look like it's beginning to form a base. And there is a buy point at 320.10. Currently, it's at 306.28. So it's starting to make a move. It's reversing higher. So healthcare is a pretty good area of the market to be in. The composite rating is pretty good, and it is moving up. But it does the advantage of this one, of course, is it does have extremely strong relative strength. The relative strength on this one is basically 99, which is the kind of relative strength that you want to see out there, because that indicates that is indeed um, very, very strong. So PODD is the symbol there. So something you want to take a look at. Just kind of showing you what I have currently. I did sell a stock this morning, and it was oops, that's my shorts. That was Lattice Semi. I did sell that one, a little bit of profit there. Not kind of just scraping a profit. Just held it for a few days. The two other stocks that I have, unfortunately, are down. Kind of That's kind of bummer, but hey, it is what it is. I'm holding AEHR Systems. That's also got a 99 relative strength. I'll show you the chart in just a second. And then I added today a company called uh, Target Hospitality, and that one took a dump too. So, gosh, not good. Both have very strong relative strength, 99. That's one of the primary things that I'm looking at right now. Of course, in that it's a strong relative strength. So let's take a look at AEHR Systems first. This is the one I've held for just not too long, about 2 days or so. I'm hoping that this one will strengthen. Of course, it is in a critical sector of the market, and that is, of course, the semiconductor industry. But most importantly, it's in the semiconductor test equipment market, which is a very good field because of all of the action that has been taking place and building new fabs in the U.S. primarily. There's a bunch of activity. TSMC, Taiwan Semi, is building fabs down in Arizona, and you also have some fabs being built here in Texas, in Sherman, Texas, by TI. I'll show you that chart in just a second. This is the chart for this is the chart for AEHR Systems. As you can see, we came down, we moved above the buy point at 28. I did buy it right below the buy point. Unfortunately, it's pulled back just a tad. I made my first buy, and then I sold it, and then I made a second buy, 27.88. We're currently at 27.60, so we pulled back a little bit. Not too bad. I definitely think we're getting some strength there. Let's take a look at the checklist on this one. Just kind of check it out and see, sort of how it stacks up in everything. This one's got an 89 checklist. It does fail on the earnings per share rating, but everything else is looking pretty good. And also on the technicals, we're pretty close. We're pretty extended. We're 18% above that 21-day line. That's one of the reasons why I got to eat my own dog food here. Typically, you don't want to buy any more than about 5% above that 21-day line, so you can get these situations where it will pull back, and indeed, this one did. So, so there you go. So, I've got to be more careful about what I do in terms of how I buy, because remember, you need to buy about 5% within that 21-day line. That's going to give you the best look. I did find an interesting stock here. This is a stock based out of the Houston area. It's called Target Hospitality, and basically what they do is they're sort of like a outsourcing company for companies that own hotels, and they've got they seem to be doing quite well. It did pull back a little bit today. I bought it probably way too rich here. But let's show the chart on this one. And basically, what we have here is it pulled up the buy point, kind of with the high point here, 1678. I did buy it right about 1802, so I'm down about $1 on this one, and it's off a little bit after hours. Hopefully we'll start to regain a little bit of its momentum. Again, I bought extended. You should never do that. I don't know. I just kind of got ahead of myself there, but I did buy it right about 18 here, as you can see, and then it pulled back and then up and then down, and then now it's sort of kind of drifting a little bit lower at about 1760 a share. But I do like the stock for a number of reasons. Mainly, not these are fundamental reasons more than technical reasons. I'll just kind of go over some of the attributes that it's got, which I think are excellent. If we look at that, see if we can see that. As you can see, every quarter now, 1, 2, 3, 4, 5, 6 quarters, it's been up well over 20% in terms of their sales every quarter. So that's been looking good. Last quarter, it was up 79% quarter over quarter in terms of sales. So sales are growing rapidly. There is also a number of interest from some of the funds. It's growing about 20 funds every quarter. So that's looking pretty decent there. Only 35% of the company is owned by funds. So there's some definite areas to go there. The concerns here, the PE ratio is a little bit high at 37, and the cash flow. But typically, with a growing company, you're going to have a little bit higher cash flow. That's typical. That's why growth companies typically have larger PE ratios. So the fundamentals on it, the forecast for 2023, they're looking to be up 94% in terms of their price. That's kind of what they're looking at. That's based on kind of, so potentially it's a double. I would love it if it was a double. We'll see what happens there. Hard to get a double these days, but we'll see. So great. Let's go and get some questions here. Let's go first for TikTok, and let's see thoughts on Piedmont Lithium (PLL). Let me just let's take another one here just real quick, because that does sound like a penny stock. But let me just let me look at. Can you take a look at Upstart, please? It's lost 90%. Well, a lot of stocks have lost about this amount. This is just kind of par for the course. But let's look at Upstart and see if that's going to give us something to do there. So Upstart, UPST, and there we go. Okay, there's quite a bit of competition in this area of AI based scoring. So this is just not a good looking chart. As you can see, it was all the way up here at 400. Wow, and right now it's trading all the way down about $18. It was up today. This is a dead cat bounce, though. I'm afraid it was up 18% today. I mean, up up about 31%. But I just think this is a dead cat bounce. This is basically a relief rally, and I don't think this is where you want to be. You probably could short it. There's just not a lot of meat left on the bone, though. If you shorted it, you probably want to short it about the 10-week line. That's about $5.16. So let's see, not quite $5. It's just a little bit low. Yeah, I'm sorry, 1680. So we're really close to that. We're really close to the 10-week line. I'm looking at the weekly chart here. Let's go to the daily chart to see if there's anything, if there's any place that we could enter this. I think it's really too late to short this one. I it's best not to short something this this well done. I mean, it just doesn't have a lot more to go down. There is some volume coming in. I think that this is I think this is just a relief. I think this is short covering or something. Not sure exactly what it is. But let's look at the at the shorts here. Oh yeah, okay. The short period, the average short period is 5.4 days, or it's up 11%. Yeah, this is short covering. So there are people shorting it. I think I'd probably steer clear of this one just because it's just not. I don't think it's going to give you the kind of thing that you want to see when it's this obvious. Usually, it's not a good time to short. So that's kind of the long and the short of it. So let's get to some of the comments. Thanks so much, everybody. Always appreciate it. Sandeep, thank you very much for this. BA, let's look at BA. Of course, this is Boeing. And this one is different. This one is a Dow stock. I don't think Boeing is going out of business. It's not like Upstart, which could easily go out of business. I don't think Boeing is going out of business. Uh, there has been some people that have been very successful at buying these off of the bottom. I've never been particularly a great bottom fisher, I'll be honest with you. But I also want to look at the chart for GE because it's looking very, very strong now that they've jettisoned some of their divisions. So I want to take a look at that one next, and compare it with Boeing. But right now, let's see. There we go. Okay, so there we go. Yeah, this is performing very nicely. It's just moving right up right up the 10-week line. It's still a little bit extended from that 13%. I'm just looking at a place to get in. It's acting very, very well. 95 relative strength, and at least so far this year, it's just been up for this. So maybe they fixed some of their problems. That would be great if they did. Let's look at this compared to. I want to compare this one to GE now that they've had the split. These are kind of two. I don't know if you really call these similar companies, but they're both large and they're both industrial. So that might be of interest to take a look at. Well, very similar. Isn't that interesting? I'm not that surprised because indeed both of these are, they're basically large industrials primarily involved in aviation. So they're similar in terms of that. They're similar in terms of of the kind of industries that they're in. Let's see if I can bring that comparison up here. Let's do it. And what I'm doing here is I'm just slipping over to the comparison screen because we did want to take a look at GE, compare that to Boeing. And there we go. Okay, so let's take a look. And really what I'm interested in looking at here is the last 3 months. So I'm going to reset the time period on this chart to 9/1/2022 to the present and see if that will give us a good look. Well, it doesn't seem to be wanting to cooperate. Let's try that again. 9. Nope. 9/1/2022. There we go. Okay, so there we go. Very, very, very similar in terms of the performance of Boeing and GE. And of course, GE, now that they're splitting off their healthcare and some of the consumer products, is going to be pretty much of an aviation company making the engines. So definitely very, very similar performance. Both good stocks. Just kind of interesting there. So let's put that up there for everyone to see. As you can see, kind of the same thing. This is for the last 3 months on that. So both have been producing some pretty good numbers. All right, let's look at SD Guitarist. This is from TikTok. And you want to look about Deere. John Deere, interestingly enough, even though it's in the agricultural area, is a leader in AI, which is very interesting because that does appear to be, part of the future of farming is that we're going to see a lot of AI in tractors that, that tractor themselves around without a human operator and get a lot of work done at night without any lights or anything like that. The AI is being actually, interestingly enough, self-driving cars may be a ways off, but it does look like very, very likely that we're going to see much more of AI in farming equipment, interestingly enough, rather than in some of the other areas, because it does seem to be AI does lend itself, it seems like very, very well to farming. So we're going to take this, just taking a look for the TikTok viewer here. This is the chart for deer. We were up to date 436, and then we've pulled back. So the question is, can we find an entry point here? Well, let's look at it compared to the 21-day moving average, because that's really how you want to buy it. It's going to tell us a lot. And obviously, yeah, we definitely can. The 21-day line for deer currently is at about 430.48. So that means that this is definitely buyable at this price. So it's kind of forming a cup with a handle. I don't know if you can see this cup, and then extended handle. So this is not necessarily a bad place to get into it. Let's look at some of the checklist. The checklist on this is really good. It's 100%. So very rare do you get a large cap stock like Deere that has this kind of a checklist. So this, if you're looking for a big cap, this might be a very good choice because 100% checklist, we're basically right at the 21-day line. This is a good place to buy it because it's not extended. And let's look at the pattern recognition. Let's see what AI says. A little bit of AI here. Off of a flat base, we have a 448 buy point on deer. So we're lower than the buy point. So we're right below the buy point. Let's see, there's a little bit of I think I can draw it right here. Yeah, there we go. This is the reversal line going from the peak down to kind of through the middle section. That's showing that it's moving. It's bounced off the 50-day moving average and it's moving up, and it's moving above that. So not a bad place to buy it. This one I definitely think that you could consider buying because it does look and it does look good, and most likely, according to what I'm seeing here, probably is going to go higher even. Hard to believe, but true. All right, Doc, thank you very much. Let's look at PBR. PBR is Petrobras, and this is the Brazilian national oil company. There's, of course, as you probably have been following this, if you're in PBR, there's been a lot of political issues down in Brazil. There was a storming of the capital. Lula, who is the former president, who was in jail, is now the president once again, and so there seems to be a lot of bad blood in Brazil. Why is that important? Well, Petrobras was a nationalized oil company. It was privatized, and so it may get renationalized. But it does look like. Let's look over here to PBR. That was deer. PBR. This is always a danger when there is, especially in South America, when the governments change to a leftist. Is there's always a danger of nationalization, of course. And but it looks okay. It's moving above the 200-day line. We're at 83 relative strength, so it's pretty strong. Believe it or not, this is a $10 stock. Part of the reason this is so cheap, to be honest with you, it's not that it's worth $10. It's just that it's priced in reals, and so the Brazilian currency. So it trades a little bit weak to the dollar. That's part of the reason for this low price. But it does look like it's moving up above the 200-day moving average. And it does look pretty good. Let's see. I probably wouldn't buy it here. We're a little bit too far away. I think. Yeah, we're a little bit too far. Well, we're not that bad. We're only uh, we're just about 5%, a little bit less than 5% above that 21-day line. That's where, if you want to get into it, that's a good place to get into it. Coming above the 200-day line. So yeah, you could probably buy this. Definitely upward trending relative strength line, fairly low volume. This red line, of course, is the The average, if it's over that, then there's a lot of volume. Under that, not so much. So this one looks pretty good. Let's look at the checklist on it to see kind of how it's, checking out. There you go. Not the greatest checklist. Well, it's good enough to buy 67%, but not a stellar checklist. There's other ones out there that are stellar checklists. Let's compare this one from Obama against ExxonMobil, which is kind of one of the standard bearers for for the industry, because these are both integrated oil companies, PBR, of course. And then let's look at ExxonMobil, XOM, versus the symbol there. Let me just go ahead and let's just look at the last quarter. I think if you look at the year, it can be a little get confusing. So let's look at the last quarter and see how that's shaping up. Oh, okay. Well, didn't want to take there. 9-1. So hopefully this will take. Yeah. Well, it didn't. Does not want to see. 9-1-2022. All right. Yeah. Okay. There we go. That's looking better. So I want to compare this against the performance in the last 3 months of um, of ExxonMobil to see kind of, if this is worth in the oil patch, if this is worth doing anything with. So let's go over to. There we go. Yeah. Okay. So we're going over the comparison chart. What I'm doing here is I'm comparing ExxonMobil with Petrobras, which is of course, the Brazilian national was a Brazilian national oil company. Then it was privatized. Now that Lula's in, it may get reprivatized. It may get renationalized. We don't know. PBR is definitely staging in the last few days a nice little bounce here, but the trend, unfortunately, is downward. So I probably would not be a buyer of Petrobras, even though it's starting to turn up. If you want to invest in the oil patch, I think it's better bet, a safer bet is probably Exxon, because in the last 9 months, Exxon's up almost a little over 20%, whereas Petrobras not so much. It's down 15%. So if we're looking at two of these and we're comparing them kind of in the same oil patch, this is the integrated oil company. I think you got to go with the big boys and Exxon. So that's what I would. That's how I would do it there. But yeah, both very good. Hey Jim, this is Brad 16, I guess. Yeah, BRAD 16. I like that. Um, can you check AMV? Let's look at AMV. All right. So what I'm doing is I'm slipping around my charts here. See if we can bring that up. Oh, Atlas Motor Vehicles manufactures batteries. Okay, so this is a battery play. Interesting. Well, it's kind of a kind of a weird chart. So let's bring that chart up. So this is the chart for Atlas. Yeah, I can't get excited about this one because this is $6.66. Just in October, this was this was over $200. So this is really bad. It's lost. Let's see how much is lost. Wow, it's really well. Let's go to let's yeah. This has lost almost its entire value. It's got a relative strength of one. This is a classic case of pump and dump. So, this is if this is in the pink slips, which it probably is. Let's look at the number of shares that are traded. Yeah, this is you might want to be careful with this one. This may be fraudulent. It's based in Mesa, Arizona, develops and manufactures battery electric vehicles for heavy and light duty trucks. It's not profitable. Let's just kind of look at the fundamentals here on this one. Yeah, boy, it's not looking good. Yeah, there's no revenue. They've got two funds in it. Boy, I tell you, I would run away. I hope you didn't invest a lot of money in this one. This one could be zero very quickly. Yeah, this is not looking. Unfortunately, this is not looking too good. Yeah, this is looking like it is potentially potentially this one could go bankrupt. So be very, very careful. Yeah, that's the problem. Some of these thinly traded stocks are just, you've got to be careful with them because if you're not very familiar with the underlying asset, these can be situations that where the company does go under. So you got to be careful. I'm not saying that's necessarily going to happen, but it looks awful weak to me. Let's look at SIFIV. I think it's Fiserv. SISV. Let's look at it. Oops. SISV. Right? No, FISV. There we Fiserv. Yeah, I'm pretty familiar with Fiserv as a company, and it's not. It's by no way is this one. Uh, this is not. This one is not a penny stock by any stretch of the imagination. Fiserv is a good company. Let's look at the daily chart first to see kind of. I don't know if I would buy it at this level, but it is a good company. It has been a leader in the past. Currently, relative strength of 70. That's below normally where I like to buy them. I like to buy at least an 80 relative strength. What do I mean by relative strength? Relative strength is the rank of the stock against the rest of the market. So this is in the top, this is in the top 30%, but I want in the top 80%. So I probably would not buy it just because of that. It is trading above the 200-day line. That is indeed good. But let's look at the checklist on this one to see if we can even take a look at it for buying. If you can even buy it, well, it just barely qualifies at 67% on the pattern recognition. Let's take a look there. Pivot is 110. We're currently at 102, so we're below the pivot on a consolidation base. That's not necessarily the best base. It's not. That's one of the weaker bases. Let's look at the technicals. Well, one good thing we're right at the 21-day line. If you did want to get into it, this wouldn't be a bad place, but I wouldn't recommend this one. I think there are better stocks out there than this one. Let's look at its peer. Compare Fiserv to its peers. This is in the financial services specialty category. So I'm going to look at the whole group here for financial services, especially this is all the stocks that are basically classified as the same in here. This has not been a great performing group, as you can tell by this chart. We've been in a decline, really, almost for a year now in financial services. We have rallied a little bit to the 200-day line, but it is still in a downward trend. Let's look at the things that are the best. I basically Clearwater Analytics. That's not something I know. These are the top relative strength. Let's look at MoneyGram. By the way, MoneyGram, it's one of the companies that is based here in the Dallas area. And I'm kind of familiar with it. It used to be part of Greyhound, and it was a spinoff from Greyhound. If you're looking for something, this is probably the strongest. Boy, this doesn't look very good either. Yeah, yeah, 83. So this is a little bit better in terms of the relative strength. I just wouldn't be buying in this category. I don't think it just doesn't look that good. So I would skip Fiserv. I would skip Fiserv just based on what I'm seeing. All right, let's take a look at some of the other questions from TikTok. Banks report. Oops, yeah, banks report tomorrow, and I think we're going to see some weakness. Believe me. Hey Jim, let's look at FLL. This is from Krubs. $1 million. Yeah, I like that. $1 million. Krubs million. Okay, so let's look at FLL. This is for TikTok, of course. All right, let's look at FLL. See kind of what's going on there. Full House Resorts. Interestingly enough, I did buy one this morning called that is in the hospitality industry, and I hadn't thought to do that. Uh, Moved above the 200-day line. It looks like it's pretty well stacked. Relatively small company, but some of these resorts companies, there has been some strength here. I want to look at the checklist. Yeah, it's a terrible checklist. I'm sorry to say. The funds in it less than 5 on the technicals. Yeah, just not looking good. Here's what I want to do. Uh, I want to compare it to a stock that I did buy today that you might be interested in. This one just doesn't look very good. Develops and manages um, uh, casinos and resorts, this has been a really weak area. Las Vegas Sands is having issues as well. But let's compare this to a company that I did buy a few shares in today called Target Hospitality, and that would be TH. And let's see, what I'm doing a comparison here, and then what I'm going to do is I'm going to do the Wayback Machine here, and I'm going to move it to the last 3 months because I mean we could look at the last year, but I don't think that's as relevant. So did I get it right? No, I didn't. We want 9, 1. All right. So hopefully that will, yeah, there we go. So comparing the two charts here, let's yeah, comparing the two charts here, in the hospitality space, one, of course, FLL being FLL, which is the casino company, and then TH, which is the one that I says, well, yeah, FLL is not doing bad. I mean, it's up, 26% in three in 3 months, so that's looking pretty good. TH, it's up a little bit more, 140. Let's compare this against. I want to compare this against the S&P 500. So I'm going to compare that against the Spider, which is a yeah. So there's the Spider. It's about 100. So if you invested $100 about 3 months ago in the Spider, you would have about $100 right now. If you invested $100 in Full House Resorts, you would have had about $126. So that's very good. That's done very, very well. And then if you invested $100 in Target Hospitality, you would have had about 140. So a Target Hospitality is up about 40%. Now, will it continue to do that? I don't know. But one thing I am seeing, and this is really interesting, is for some reason I'm seeing some interest in the hospitality space. As you can see, that it's starting to channel up. So that's looking pretty decent. So this is where if we're going on a treasure hunt, this is where we might want to look for some treasure because hospitality seems to have been a beaten down area. Now that COVID's over with, I think it's probably going to come back to life. Some people have been very successful in buying as things come out of recession. I do think though that travel will be back up, obviously because there won't be the COVID restrictions. People will be using hotels and motels, and so I do think that that may be an area that we're going to see some nice nice movement in. All right, Charles, thank you very much. This is Rocket, RCKT, Rocket Mortgage. Now, as you know, uh, Wells Fargo is going to be getting out, at least, oh, I'm sorry, Rocket Pharmaceuticals, excuse me. I thought this was Rocket Mortgage. I apologize. Rocket RCKT, is that right? RCKT? Yeah, okay. So I was confused with Rocket, not Rocket Mortgage, but the Rocket Pharmaceuticals. So this is Rocket Pharmaceuticals, different animal altogether. Sorry about that, Charles. Um, 94 relative strength, I definitely like that. I like the fact that it's trading above the 200-day line. I really try to buy everything above that 200-day line because that kind of indicates to me that big money is not flowing out of the issue. It's still kind of flowing into the issue. So I definitely like that. Let's look at some of the particulars here. Checklist is good, 60. Well, it's not good. It's acceptable, 64. It's about the minimum I'll buy. On the technicals, a little extended, not too much, 8.93. So it definitely is extended. So here's what I would say, Charles, on this one. Looks pretty good, but I wouldn't buy it. It's a too far extended above that 21-day exponential. So if you're interested in buying this one, and I think you probably might be able to find something a little bit better, wait until it pulls back a little bit and then possibly buy it. The 21-day line on this one is 1973. So you probably want to wait for it to pull back maybe to 19 or so if you want to buy it. I probably would not be a buyer of this one just because it just doesn't seem like it's baked and ready yet. All right, let's look at FTI. And moving over to FTI. This one, oops, well, helps if I put in the right thing, doesn't it? FTI. Yeah, okay, Technic FMC. I don't know. This designs, manufactures, and services systems for land and offshore exploration. Okay, this is a good area. This area has been getting a lot of love as of late, and that is, of course, the oil field services area. I want to check this, and I want to check this relative to a company called Tidewater, which has been seeing some very good movement. Let's put this one up on the screen. So this is there we go. So this is tech. I can't pronounce it. I apologize. But it's making a nice move, and it looks like it's come up. This may be close to a buy point. So this is interesting. We are a little extended. We're 6.3% above that 21-day line, so we're a little extended here. But I still like this action. 78 checklist. This is good. This is very good. It's also in an area that I think there has been money flowing into this area. It's in the oil and gas machinery equipment area, or and also oil field services. So I like that fact there. There's been fairly good investment in that area. Let's look at the so is this a bear market? Okay, so let's look at the sector because that's I'm not as familiar with this company. It's 42, so I like that. It's in the top third. Always want to see that. Oil field services. Yeah, oil field services are the one that's really doing the best of these kind of businesses. It's got a 99 there. Oil field drilling. So I probably, if I was looking at this one, I'd also look at these two areas. Let's see if we can look at the oil field services and let's see if there's anything there that we can find that is i- is good in the oil field services area. Well, yeah, there we go. So let's find the oil field services. Let's bring that up here. Oil field services. Right. Because this is the one I think that we want to really look at is the oil field services group. Okay, and let's look at the stocks that are in that group. All right, and I want to look at the top ones if I can. Always want to try to buy the best quality that we possibly can. The number one is, well, Halliburton has been doing very, very well. This is one I'm not familiar with. SLB. Um, let's look at the top stocks. I think that probably Halliburton. Yeah, Halliburton has just had an upgrade. And if you're looking in this area, I think that you want to kind of look possibly at Halliburton um, because this one just got an upgrade today. Again, I think there's going to be a lot more investment in oil drilling, believe it or not. And this one does look very, very good. Now, I did make a buy here. I did close this. I mean, I scalped this one as it came up. I bought it. This is on the 9th, and then I closed that trade. But this one is looking pretty good. We've got an upward trend on the relative strength line. Let's see if we could buy this one. Yeah, it's 100% checklist. This is the kind of one that you probably want to look at, Charles, as opposed to the other one. It's a little bit more expensive, of course. It's $42, but this is a leader, and it's definitely got the 100% checklist. It's coming right up to a pivot. Let's go look at the pattern rec on that one. The pivot here is basically at 39 at 59. We're just above that pivot. Let's look at the technicals. I think we may be tad extended here. Yeah, we are. We're extended 8.22. So we're a little bit extended. Here's what I would probably do. I'd probably wait for it to pull back a little bit. It's been up 1, 2, 3, 4, 5, 6 days in a row. So I think this one is going to pull back. Here's what I would do. I would probably set a trap for it to see if I could buy it right about the 10-day line. The 10-day line is about 39.80. So I would probably set a limit order at about 39.50. See if I could pick up some of this Halliburton. But I definitely think we're going to get a pullback on this one, just because nothing goes up every day. So it's been up about 5 days. Expect this one to pull back. But this is going to be a good buy on the pullback. Halliburton, HAL. So thanks for that. All right. So let's see. We are overbought ATM. Yeah. I don't see a reason for us to break the resistance. Yeah, I think you're right. I think it's a very good point. I do think we are a little bit overbought. There's been a little bit of optimism, and I do think we're probably gonna move probably to the downside. That's one of the reasons I'm shorting Lululemon. I can't. I tell you what, I have tried to short that thing so many times, and I have come up on the wrong end of the stick every time. So don't follow my lead on Lulu, because I haven't been right on that one. So, but I have been buying, very, very selectively in the chips area. One of the areas that I'm very interested in also in is in the oil field services, because I do think that we're going to see a lot of spend there in the oil field services. All right. Well, we're almost out of time. We're almost out of time. Here's, if I could implore everyone, please, 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 definitely like us, because it definitely helps. I know I say this every day, but it really does help. And so please, smash that like button. I know everyone says that, but hey, smash that like button, please. And also, if you're not already a member of the free Action Trade Alerts, just go to www.Dallas Trading Floor, first and last name and email address, and we'll get you set up on that. You can cancel anytime. But I do put out lists from time to time and sort of recommendations. If I don't really have anything right now, because I haven't seen, a little bit of difficulty in the clear direction in the market. But I do think once we get a clear direction, I'm going to be sending out some recommendation lists of things that I'm looking at, my watch list, that kind of thing on there. But go to www.Dallas Trading Floor. And if you're watching on TikTok, just all you have to do is go to the the link in the bio, and it's right up here. Go to the link in the bio and click on that, and you'll be good to go. All right, everybody. Thank you so much for watching. I'll be back tomorrow. Oh, wait a minute. Do we have a last question? Let's see if we do. Make sure that I'm getting everybody as much as I can. All right. I'm on. No. Okay. I mean, yeah. That's interesting. Okay. Here we go. Thank you. Thank you for that. Oh, I'm sorry. I'm sorry. SLB is Schlumberger. Okay, makes total sense. Makes total sense. For some reason, I didn't recognize that. I should have recognized that, because Schlumberger is. Let's compare Schlumberger just for fun. Let's look at Schlumberger and Halliburton. They're both excellent companies. Schlumberger is obviously the one that's a little bit bigger. So let's look at this really quick over here. What I'm gonna do is I'm gonna do a comparison with Schlumberger SLB. Oh, SLB. Schlumberger. Oh, is that? I might not get yet. Schlumberger. Okay, yeah. Wow. For some reason, I'm going to get that right. Schlumberger, compare it to Halliburton. HAL. And let's look at the last 3 months. Compare the performance of both. Hopefully, it'll give us a look-see. For some reason, isn't it? Okay, did give us a look-see. Anyways, but yeah, they're both excellent. I'm sorry, I guess they've just gone to SLB now. They're not calling themselves Schlumberger Limited. They're just using the symbol, but they're both excellent. All right. Well, thank you very much, everybody, for tuning in. I'll be back tomorrow at 5 o'clock, same time, and hopefully we'll have some direction. And I'm pretty much in cash right now. I do have a few positions, but again, I'm trying to find things to invest in, trying to put money to work. Not easy right now in the market. So keep your powder dry. There will be some good stuff to invest in. I'll see you tomorrow. Happy trading.